Hey, what's up, y'all? This is Uneducated Yogi with One Family Investing, where we gain knowledge, we make moves on investments, and we meet like minded people. That's right. It says it right there. I'm just a guy, but it says it right there. And then we invest, we learn, and we make profit. All right. I want to go over something with y'all today. Basically, how I learn, how I teach, or how I practice how to day trade before day trading, how I practice how to day trade before day trading. And I wanted to go over this because um, it's just one of those things to where I know because we're meeting like-minded people, some of us might be holders like I started. Some of us might be, they want to practice day trading and they don't know how to do it or get into it. But I was going to show you how why I have any type of confidence in something that I don't do on a regular basis. And I was gonna go over ICP chart here because man, there's a lot of see. Um, I drew in all these lines on here. See, without these lines, no purple lines, no blue line, none of that. Um, I was able to predict this right here, and there's a reason why I was able to predict it. So it's because when I put in these lines, you see these lines, it went almost up to it and it came down. So this would have been a trigger moment for me to come in on a trade, so to speak. Let's just say I was trying to trade this. This right before this was at the bottom where down here you have the times. You have the times down here. So this was around 8:26. It's 8:49 right now. So what could have been happening is I could have been sitting here watching this, and as soon as this got up here, I would have seen that it would have came down, and because of this second candlestick being under here, so this first candlestick is red, it would have made me go, oh, okay, well, let me keep an eye on this because it went under my resistant line. So this is called a resistant line. Why? Because it's underneath, um, the candlesticks are underneath it. So when it's trying to push up above the line you have, it's called a resistant line. So it's resisting it from going up and keeping it down. And if I would have seen something like this happen and I would have waited for this one to come in, uh, I would have honestly, I probably would have waited until this one closed and see where this one happened. And if I would have saw this green, I would have waited for this. And as soon as this would have happened, this would have been a really good sign. And I would have seen this. And then I would have been basically prepared to come in as soon as I saw this. So I'm just being real with y'all. I'm not going to be like, yeah, I would have opened up here because that's a lie. We have to wait to get confirmation. So my confirmation probably would have been around here. And that's a real confirmation for me. No, sorry, right here. That would have been a real confirmation for me. And, you know, um, if this would have kept going down like this, I probably would have seen it come down here, and then I would have let it go up. And then once I seen this green one, this green candlestick, once I would have seen that, I probably would have taken out right after, probably when it opened, probably here. Okay, so I probably would have done that. So that probably would have been my move, from there to there. And that's just because of I'm able to read this and make a decisive play, a decisive move. So because these are already up, and I want to basically go over it step by step with y'all, I uploaded the Bitcoin chart here, and I say we just go over some stuff really quick. So let's just say if I was using Bitcoin, and a lot of people know Bitcoin, not so many people know ICP, which is the cryptocurrency that is in the public account as well. So, but let's just say I was wanting to practice my to see how good I am, right? Of reading charts and things like this. So I use what's called support and resistance lines, or I've just recently heard it called support and resistance trading. I just didn't care what it was called. I just knew it worked. So here is what I did. I just put this one line here. So the reason I put this one line here is because this is where it's trading at right now. So this is today. Um, uh, you know, uh, so this is called a day chart. Oops. Right here, you see this 1M. This is called a 1 minute chart. Now, if I go to the day chart, you see I click on the 1 minute and then I go to 1 day. When I go to 1 day, you see how far out it is now? And you see I've been following ICP for a little bit. I have different support and resistance lines already, like way back there. This is back into February. See at the bottom, if you look down at the bottom corner there, it says 9 February 25, so February 9th. So this is what ICP is trading right now, and I did a lot of this today. So this is called a 1 minute chart. And on this 1 minute chart is what I was playing around with and reading. So we're going to do that with Bitcoin. We're going to get from that pulled out view, and then we're going to go in to see how we could be trading, like right now. So Bitcoin, it has a D up here. That's the 1 day chart. And the reason we look at the 1 day chart first is when we want to see any patterns that we can find of where it was, these candlesticks were resisting, or where the fight of the bulls and bears are. The bulls, you'll hear this term, the bulls are the ones who is driving the price up. The bears are the ones who are driving the price down. And one person told me, you remember the bulls because the horns of a bull go up. So that's how I remember it. And then the bear swipes down to attack or something like that. That's how he said it. So that's how I remember it very easily. So the bears down, bulls up. So I picked this line. So I just made one line, and then I'm going to do the rest right now with y'all. So this one line is how I would practice first. And the reason I picked this part is because if you can see, a lot of these candlesticks right here, they were trying to go up, but they couldn't go up all the way. This little thin line is called a wick, and that wick tells us that people were going that way, going in that position, but it didn't close in that position or open in that position. So when it's green, that means it opened down here, and the green, the bears were pushing it up. And the bears, they were trying to make it close all the way up here, but they couldn't make it close up there. So what happened is the bears pushed it back down, and it closed right there, at the top of that one. And then this next one, it kind of stayed in the middle, but they pushed up and they pushed down. And these ones, they had pushed down within that 1 day. They pushed all the way down. If you look over here, you see these numbers over here. I'm gonna hover over these other ones. The O stands for open. The H stands for the high. The L stands for the low. The C stands for the close. So when I go over here to this wick right here, this candlestick, you see the open is where it's at. The open is at 94. The high was at 90. The low was at 92.8, and then the close was at 94.7. That. So what I did is these were fighting, but they were closing around here. And then that kind of made me go, okay, well, let's just see how it was looking in the past. And if we go to the past, that line is actually not a bad line because if we go back here, so right now this is called a resistant line for these ones. So this right here, it resisted. Boom, it resisted. It stopped it. It stopped it from going up. And before, it was a support line. So support lines become resistant lines, and sometimes resistant lines become support lines. But we'll talk about that a little bit more detail later. But right now, we could just know that this one line is a support and a resistant line. For the past, it was a support. For the future, it's a resistant. So I'm going to leave this here because that's not that bad. And I'm going to put another one. Okay. I'm going to put another one around here. And I'm starting this because if you look over here now, see this wick went all the way up here. So it was fighting to get up here on this day. This is one day. This is one day. This is one day. So right now, I'm going to see this wick, go to the top of that wick, and then the line just stretches all the way across. I'm seeing on the other end that it is this play right here. This play right here. You see this play right here? It kind of supports this line being here because this play right here has some type of resistance and support going on. So Bitcoin, it will play around up in here for a little bit, a couple of days. So from February 5th all the way to February 23rd, it was playing between there before it made a big move down. And then it made a big move down. And then, that lasted from the 24th of February before it started coming back up on March 1st. So March, April. So then we have April and then we're into May. Okay. So this March and April is here. All of this is March and April. So imagine, you come in on a day where it was up here and a day trader can make money going up or going down. So, a day trader, they can come in here and if they get out down here, they're happy. That's a $10,000 difference, a 10% difference. And depending on how many, contracts you have, and I really got to get the real name for this. I think they're still called contracts. Like calls or puts, they're on contracts. But anyways, contracts you have, you just made a lot of money right there. So, but let's keep going. So I'm gonna put another line. Let's put so this will be our support line. Because the candlesticks are above the line right now. So this is called our support line. And now we're gonna make a resistance line. And we're going to put it around here because of what I was just saying over here, right? See this wick is showing us for that day that it wanted to go, but it didn't go. And we'll figure out why in a second. Well, not why, but we'll read it. We'll read the charts. Okay. And then put this over here. So I stretch this all the way back. And the reason I do this is because I can see why I put these particular support and resistance lines in, because you shouldn't just do it for no reason. The history tells the future. You can think about it that way. I wish I paid attention in history class after I realized how important history was, but I know now. So right here, and I'm looking at these, and this is why it's good to go back all the way. You see this? Look how much this has been a lot of fight action around this area. There's a lot of fight action. And some of this is making me want to move it a little bit up a higher. Okay. And then we're going to do the same with this one. We're going to go back in history. And we're going to keep it around our price. Don't have the line go like this. So now that we have that, I'm going to check this out. I'm okay with this because there's things bouncing on it. We're just looking for fight action around the lines that we're picking. Okay. So now we're going to go in close. And I can put a couple more here, but this is what I'm going to do for now. kind of want to put one here, but no. Okay, so what I'm doing, I'm looking at these areas and something that is close to this, but you know, it gives me enough distance to where I can tell that enough movement needs to be happening. Anyways, I'm gonna leave that for now. Actually, I'm gonna put one right here, okay? Because these all tried to come down here, and this tried to come up here, and I believe like there can be some play in this area. I just want to put this as a just in case, like right here, because you can see all the way over here even. These are sitting up here, so there's a lot of fight in this area as well. So I'm gonna put one more. Yep, I'm gonna put one more, and I'm gonna make that one red, because it's not gonna be my main one I'm playing with, but I'm gonna keep an eye on it. I'm gonna do one more on top as well. So we're gonna find one. So there's a lot of play here, play here, play here, play here, some line, you know, some here. So this one, like here. So all of this right here, these right here, these right here, this play here, this play here. So we're gonna say here as well. And this one is kind of, you know, it's like not as strong as the other one, I would say. But it's still enough for me to want to put one. And I'm going to split the difference between the top of this and the bottom of these ones. I'm going to split the difference. I'm going to go in the middle between those. Okay. So just like this, and now we're going to move in close. Okay. And now we're going to go to our 1 minute. And before that, I like to just check out my 15. So within my 15-minute chart, see those two blue lines that we put up? It's properly set up as go to 30-minute real quick. So this is how I practice. And Bitcoin, man, I didn't know it was so volatile, man. This is crazy how much it moves. So for the sake of the video, man, I just want to sit here and do this with y'all in an honest way, because looks like a lot going on. Okay. So even this move, like, so something, because this would have been readable based off of what I know, right? So from there to there, it's a $642 difference. So this is the potential of having, like, you know, like one contract. I don't know how it works in, I'm assuming in Robinhood you can trade fractional shares. I don't know how it works in Coinbase yet as far as like the day trading stuff. I'm not sure how it works. I'll be finding that out. But just a move like that, I mean, it's $642. Is 67. See, I gotta know this too. But because I don't think it's, I think it's of one, it's 67th of 1%. So it's not like 1%, because if you keep going, it'll get to 1%, 2%, like that. But anyways, this move could be a significant move if, you know, if you're trading in a certain way. And depending on what type of chart you know, or yeah, depending on what you're trading as well. So, um, let's actually, I'm going to end it there. I mean, y'all should try, just go in. This is Coinbase Advanced. Just go in and play around. I'll leave something in the description to where like where I learned a little bit about this and how to look at these, and also a new guy that I trust who does really well in this. But just learning this is a good skill to have. And I'm gonna make some more support and resistance lines, and maybe tomorrow or even later tonight, depending on how it looks, before I go to sleep, maybe I'll record something to just show y'all like the progression, and I'll talk about why I made the certain support and resistant lines for the reasons that I did, so you can get a little bit insight. Anyways, I hope that did something. Yeah, I hope that did something. I didn't know it was going to be so long to try to explain this. Yeah, so I'm going to end it here. Again, like, subscribe. Your boy's trying to get to 50 subscribers so that I can do live streaming. So it'd be very, very nice if this helped you at all, or if you just feel bad for me. I appreciate it. Just go ahead and subscribe to me. You don't have to turn on the notification bell even, so you won't feel bugged by me. And you can go to Podia or onefamilyinvesting.podia.com. We'll leave this on this one on the way out here. Y'all can see how this things is moving in between what I got going on. So we just saw it went up here. So y'all just saw it come up here. It was down here. And look, it went back up. Oh man, look at this. So it went back up. So if I would have had some sense, I probably would have, boom, and this would have been looking good. I honestly probably would have risked past that. It's only 1 minute. So we would have went up here, and then once it started to go red, I probably would have went out down here. So that's like 34 cents, you know, on the dollar or something like that. I want to say it's less, but actually, no. Yeah, 34 cents on the dollar, because it started at $4.69 and it went up to $4.72. And how contracts work, they work in like big numbers, and that's why I want to get that down for y'all later. But anyways, as you can see, you know what I'm talking about. I know what I'm talking about. It went up. Y'all saw it be less than this, and then it goes up above this resistant line, and now that it broke up above the resistant line, so this is how I would have read this. As it was coming, I would have been hoping that it either broke it or it comes back down and eventually goes down to the one that is below it. But since it's not, now that I see, oh, okay, went above that line, and this is here because it was a natural resistant, and I got that again from the past. I got that from these past understandings, and I went far back because I couldn't find one, you know, here. So I went all the way back. That's why I mean how important it is to, you know, read the past to understand the future. Let's go to a 15-minute chart. So I went all the way over here because of something all the way back here. So look at this. So this is back in April 21st of April. It's loading. Hopefully it's still recording. So come on, zoom in. Zoom in for me. So I went to the history to read the future. And I'm going to go back to the future real quick, or our present. And you can see down here, it's the same technique I'm using of just understanding where the action is happening. So there was action, 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 action. That action Jackson. Okay. So that's the 15-minute chart. So it told me that line. And then because I didn't have too much other than that, I went to double check with more history. So now that's a natural resistant line. And now you can see it's playing in here now. And it's just cool because you can actually know how to read this stuff just by reading the patterns. And then these moving averages, I learned that recently from somebody. When it's red, yellow, green, not green at top, but when it's red, yellow, green, it typically is moving up. Red, yellow, green, it moved up. Red at top. Sorry. Let's look at, okay. So red, yellow, green, you see the big move up. Red at top, yellow, green, big move up. The red line is up top, the yellow, green, just like a stoplight. Red, yellow, green, boom, it moves up. Red, yellow, green, a little move up. So it kind of predicts it. When the green is at top, you see it's moving down. And that's pretty. You can understand it and read it. The green is on top the whole time with yellow and red. Look, it's moving down. It has a downward trend. So that's a different thing. So what I'm showing y'all though right now is the resistance and support. This is how I started. I did not know what moving averages were at first. I started with just understanding how to read the candlesticks and where to put my resistance and support lines. And before I don't even think I knew how to say that properly. I don't know. I'm a pattern reader. So I watched some videos and I was like, oh yeah, I get it. It's easy. So I'm just hopefully making it easy for y'all. You pull out day chart and then you pull in and you get more specific based off of like how the chart is moving. And again, I didn't know it was going to take this long, so I didn't finish the Bitcoin one, but I'll keep doing that one. But you can see this it might play around in here for a little bit. If this moving average, this yellow line comes up while the red line is still up, then that's a good sign to say, oh, it might take off back up to this purple line up here. So that's what I've been playing with. I've been playing between this purple line and this purple line, to be honest. But yeah. So, because this was just earlier today. This was at 5 o'clock. So it was above here, 5 o'clock. And then it was above this purple line earlier today at 4 o'clock, 4:30. 4:30, 5:30, and then it just kept going down. And imagine you can play these, if you have confidence in reading charts, you can play this all the way down or all the way up, and that's how you make money as a day trader or a swing trader. Like something you can also do with these is swing trade, but that's a different thing. But just learning how to read charts. But you can go ahead and practice. This is all free. You go to Coinbase. When you go to Coinbase Advanced, you click on a cryptocurrency that you want to practice this with. The main tool you'll need is just this one right here, the trend line, and you just start by finding patterns like I just showed. Go back and watch this video. See, this is breaking down now. This is like NFL. This is like a stock stock and crypto NFL for me. So this is moving down right now. And who knows? Within this little time, it might Look at it. It's just going down. Just going down. Slowly, slowly, slowly. So so this candlestick is going to close, and if the next candlestick closes underneath this line, then that's called a sign that it might go back down. Okay? Bulls, so it turned green. The bulls were pushing up. Oh, they are. Oh no, it was this. So it opened still down here, but as a bull candle. So it's trying to push up. So now this fight right here, what I want to do, we could just look at this fight right here and see is it or if it's going to close below it. Just because it's going up like this doesn't mean it's going to close above it. The bulls can be pushing it right now and it can still close down here. But based off of this, we can assume that it's going to go back. But it's no need to assume. We just that's why we take emotions out of it. And that's how we take emotions out of it. We can just look at the reading as it's going, like, and in more advanced charts, they even have 15 seconds, 15 second, not 1 minute. So I wish they had a 15-second because, man. So look, it closed, and now this new one started. It closed. So it closed above, and then this one opened up above, but as a bear candle. So yeah, they're pushing in between here. So the sellers are trying to, sellers are selling, the buyers are buying, sellers are selling, buyers are buying. So it's going to keep doing that. And yeah, I mean, that's it. So this stuff gets exciting once you really know how to look at this, man. And then, because you can go, okay, well, my risk to reward ratio, anyways, I can put in here and I can take out here, and it just becomes like not a gamble. It becomes like a sport that you know how to play based off of statistics. Okay. I think that's going to be it for now. I hope that did something. This is really long, but I feel like, I don't know. I would have liked to have known this type of stuff based off of my curiosity. Not all of you, but maybe you know somebody who would be interested in learning this stuff. Send them over. The more y'all ask questions, the more I'll answer about these things. So that's going to be it. Love and peace. This thing is trying to kick me off. If this is still recording, 50 subscribers, and share with somebody. Share this with somebody. Just share with anybody. I just want to add this at the end of this video or somewhere in the video, because we were just talking about this line. So this is on ICP chart. Right after I ended the video, this move happened. This candlestick happened under this support line that I had. So again, it was in here. So that means this was a support line. It went below the support line, and then this happened. All right. So what I would have, as I'm looking at this happened. This was going on, and ideally it'd be nice to say like, man, I would have got in right there. But no, you wanna wait to see how this closes out, because it could have been red and it could have closed up here and would have made it green. Okay. It would have made it a bull candle. So because it closed down here, so you have one underneath, full underneath, you have another one underneath. This one happened. I'm getting in, bro. I'm getting in. There's no way I'm not getting in. And based off of that one move, and look what happened. It kept going down and it went below this bottom line right here that I was saying, right? So I would have came in 100% right here. There's no way I wouldn't. I'm a risk taker, so I would have seen these two, and I'm in. It's bearish. We're getting in. So I'm here, and then it would have went down here, and then once it would have went below here, I would have kind of let this keep going a little bit, and then I would have got out. So let's just say not all the way down there, but let's say right here. 28 cent. So 28 cent. to the dollar is what I would have earned. And like I said, we be doing these in big numbers, right? Let's just say I was playing with 4,000. So 4,000, and just so we can see how we would read this. So, like I said, you have the 1 candlestick, the 2, I would have came in here, and I'm getting out around there. Let's go up a little less just to be safe. So 28 cents to the dollar. So 4,000 times 0.028. I would have made $112. I'd have made $112 within from 9:30 to 9:41 or 9:42 if you want to be safe. So 9:30. Yep, 9:35 to 9:42. So, less than 10 minutes. 9 minutes. What I'm saying is that's so cool. Just 10, 15 minutes, I could have made $112. That's cool, okay? And we can learn these things. Internet, you can learn how to do what I'm doing right now free, all right? And then you can learn it more even with me. How I just keep it very simple. I keep it very simple. And yeah, I'm showing you how to do this. But anyways, I just want to share that because it happened, right when I hung up. And look, it's going back up because it's not gonna go down all the way like that. Like if this closed below, if this one opened below, going down, and then there was another one that opened below going down. Okay, yeah. We might be going to the next one down. This next one down. But that's not what's happening. So it opened above, and now they're back at playing in between these low for 470, low 470, high 470. So, anyways, just want to share that real quick to add it up in here. All right.